Welcome to the Movers and Shakers podcast, where real students are doing real deals in the world of multifamily real estate. I'm Vince Gethings, the owner of the Wheelwell Profits Academy. Listen in as we dive into the journeys of driven individuals who are turning their dreams into reality. These people are just like you, taking action and making things happen. If you enjoy the show, please like, subscribe, and if you're ready to take action, check us out at wheelwellprofits.com to learn more about our incredible community. Let's get started.
This is Movers and Shakers, where we interview the upcoming generation of Make It Happen multifamily investors to share their story.
Welcome to the Movers and Shakers podcast. My name is Gino Barbaro. I'm co-founder of Jake and Gino, multifamily investor, educator, father, mentor, and I'm joined by my co-host, my brosif, Josh Rusin, the community director of Jake and Gino. How you doing today?
Gino, doing well. A lot of big things going on, making it happen. Super excited that we grow the community and keep taking massive action, providing massive value. What about you?
I see we're matching again today. Same black shirts on. We're looking good. We've got a great guest on today. The community keeps growing. They keep closing deals. And it's just a lot of fun doing these podcasts because I love sharing these stories with students who are just out there making it happen. There's no deals. There's no time. Well, we have students on every week that are making it happen because they know their big why.
Love that. Speaking of today's guest, we got Dan Krueger. A little bit about Dan. He graduated from the University of St. Thomas in St. Paul, Minnesota, with a degree in financial management. Before beginning his career as a real estate investment professional, he spent 5 years working in corporate finance, where he managed the operating expenses for multinational Fortune 500 companies. In January of 2018, he closed on his first property, a 6-unit apartment building in St. Paul, Minnesota, for $475,000. The business plan was simple: fix up the units, improve the tenant base, and increase the rents to market rate. 9 months after the acquisition, he refinanced the property at a value of $600,000. He used the refi proceeds to get into his next deal, 8-unit apartment building 3 minutes away from the first property. He currently has a portfolio of 34 units made up of 4 properties, all in the same neighborhood. Also, he's working on closing his first syndication deal, a 32-unit property, also in St. Paul, Minnesota. He's building a vertically integrated business with property management in-house, as well as in-house maintenance and construction. From here on out, Dan plans to focus on the syndication business to keep scaling up, as well as developing strategic partnerships to accelerate growth. Welcome to the show, Dan.
Thanks for having me, guys. I'm excited to be here.
All right, Dan. So let's start with this. I know you're young, right? And you're making it happen. How old are you?
33.
33 and crushing it. All right. So you have an established career. You're working in corporate finance. Why did you get in real estate? Where did that idea come from? Let's talk a little bit about that.
Well, I got bit by the entrepreneurial bug several years before I got into the real estate thing and started a nutrition consulting business. And while I was, trying to ramp that up and reading a lot of entrepreneurial books and studying, I figured out really quick that the corporate world just wasn't a good fit for me. I didn't have the ability to go in and work harder and earn more money. Best case scenario, you get a little bit of a raise or maybe a promotion, but there still wasn't that direct correlation between how hard you worked and how much you could make. So I felt like there was this kind of ceiling that I wasn't too excited about. And then around 2017, I started digging into real estate in particular. I was already pretty well versed in finance and investing. And around 2017, I got into the real estate research, and that's where I just got hooked. Compared to everything else, it just seemed the least like gambling as far as investing is concerned. Everything else out there just felt like it was gambling, and real estate just made so much sense, and it was just so simple.
From there, you skipped the single family stuff. You didn't do a duplex. You didn't do a triplex. Your first deal was a 6-unit. Why specifically the multifamily niche?
I just felt like there was lower risk in that area mostly because of the valuation. You're less dependent on market fluctuations. The value of the property isn't necessarily determined by a neighboring property. It's determined by the net operating income, which you have control over. So that level of control was very attractive from day one. And then obviously just the scalability. If you want to get 100 doors under management, that means if you're doing single family homes, you're doing 100 transactions. In multifamily space, you can do that in one transaction. So it's way more scalable, and you just have a lot more control over the assets, especially if you're going to be a vertically integrated organization and you're controlling the management and the rehab projects and all that good stuff.
Well, Josh, there's a couple golden nuggets before I ask Daniel my next question. The first thing is everyone out there, listen to what Daniel's talking about. He's talking about an asset that he controls. There's three basic human needs. It's food, clothing, and apartments. That's the first thing. We need that, right? Second thing is, he started a nutrition consulting business, and I want to ask him a couple questions about that. But he viewed multifamily as a business. That's really important. A lot of people getting into it view it as real estate and view it as landlording, and you need those aspects of it, but it's really business at its highest level, creating systems. The next thing is time. I'm actually in the process of selling a property in New York. One property, it's taken up hours and hours of my time. The time value is so much. If you need to buy 100 different properties, you know how long that's going to take you? It's going to take you thousands of hours, and it's going to take you thousands and thousands and thousands of transaction dollars to do that. You can buy 100 unit complex as opposed to 100 single family homes. Who's winning? So those two things are important for everybody out there. I didn't know about it until I started selling this fourplex, Josh. It's taken me like the last 3 weeks between a title search, between the appraisal, between getting back with the attorney, between getting the mortgage documents. It's a nightmare for one little property. I don't mind doing it for 100 units, but one property, it's not worth it. Let's dive into the nutrition consulting business.
Yeah.
When you got into that, why did you, I guess, not go into the long term with that? Why did you get out of that business?
It was mostly, I didn't get out of it. I'm still doing it, but it's back to being kind of the side gig again, now that real estate is the main concentration of my time. I didn't see that as too scalable because it's a consulting business at the end of the day. So I'm basically still trading my time for money and working with people one-on-one. And I love it. It makes me feel great to help people and help them achieve their goals. But it wasn't really a scalable model. And it was very... It just didn't feel scalable, I guess, at the end of the day. So it's something that I love and I want to keep doing, but I see it more as a passion project now as opposed to a wealth builder. Because actually, it's kind of like a transactional business, like flipping houses or something. You get a client, they pay you, and then, when that relationship ends, it ends. You're not building any kind of equity or anything like that, like you would with real estate.
It's great because Jake talks about it. When you work for your passion, like Jake loved it. He always says he's the inventor of CrossFit. He fell in love with his passion and he wanted to be a personal trainer, and he'd go to the gym and he'd tell, hey, John, let's start doing this. And then John is like, his personal student. I don't want to work out today. And Jake is like, my passion was getting sucked out of me. So I'm going to hold up the honeybee for everybody. Building multiple streams of revenue. Now, Daniel was in nutrition, is in the nutrition business, and I was in the restaurant business. So if you read the honeybee, you'll understand how Daniel can make this nutrition business more of a multifaceted. It takes a lot of time and energy. Daniel could go out and write a book about nutrition. That's one of his streams of revenue. He could start a little podcast on that, right? He could start trying to reach out and do some training videos on it. He could create some supplements on it. That mean that the time is endless, but as you can see, where's Daniel's time best served? Is it better served in the multifamily space, or is it better served in the nutrition space? So the way he's doing it, I totally agree with him, because I feel like that in the restaurant business. I was on the hamster wheel, making money, doing one-on-ones, doing a catering here, a catering there, but it was not scalable because you really need to focus a couple of years of time. I think multifamily allows you to do that, but then you have the tax consequences, actually the tax benefits, I should say. You have the scalability. You have the ability to, hey, you want to take the weekends off? You can put your property managed. So I think your business is great. And I love the way you say you're using it and trying to help people out. So that's part of your passion. So I commend you on that. So does that make any sense, Daniel, to you, that as far as the nutrition business?
Yeah, no, I mean, it's the same page I was on too. It's just something that I love to do. And it just, I could build it up if I wanted to, but the ROI on my time wouldn't compare it to multifamily. Way more bang for your buck as far as hours spent on the multifamily business. And then, you mentioned the tax piece in there. I didn't even mention that. When I first started researching this stuff, that's where it was game over compared to anything else. Not only is it going to be something that can create a wealth for you, but at the same time, drastically reduce or even eliminate your taxable income, depending on if you're doing cost segregation studies and stuff like that. That's where it really doesn't compare to anything else, unless you're looking at maybe drilling for oil or something. Those are kind of the two things that the government really loves. So, the tax piece is just the cherry on top, really.
I like that. So Daniel, you're going through a current deal right now. Can you talk about the deal right now?
Yeah. So we're working on wrapping up the due diligence on a 32-unit complex in St. Paul, Minnesota. Built 1964. I've had one other building that was built in the 60s, and I really like those. They built them pretty well. The floor plans are all the same, so you do one unit, you've got a good sense of how the other ones are going to go. But it's a basic mom and pop operation. The people who've had it or who have it have had it since 1999, and the husband in the owners there, it's a husband and wife team, so literally a mom and pop operation, was doing all the property management and maintenance for a long time, and then there's been some health issues recently. So when that happened, the management and the maintenance pretty much stopped. So there's a lot of deferred maintenance. Rents are very low. So there's a big opportunity for someone to go in there, deploy some capital, ramp up the management, and turn it into a really great place to live.
How did you find a deal?
This one actually just fell into my lap, funny enough. I've been putting out real estate education content on my social media channels, and a broker who was following my content just randomly fired an email to me. I'd never met him before, never heard of him. Gave me the real high-level numbers of the deal, and just said, "Hey, we've never met, but is this something you might be interested in?" And I thought it was fake at first because the numbers were too good. I was like, "This is kind of a unicorn deal. This is exactly what I'm looking for." So I met up with him. Turned out the deal was real. He was a nice guy, and we just took it from there. So just kind of fell into my lap, really.
So for everyone out there, I want you to write this down. This is also known as working your ass off, because nothing falls into your lap. Because I have a lot of Jake and Gino students that say, "This deal just fell into my lap." No, you've been working for the last 6 months in the market, getting shot down, telling brokers you're crazy, putting in lowball offers, and then going through due diligence, it falls out of market, and following up with the brokers. So I love how Daniel says nothing falls into the lap. You really work hard and you really understand the market. Really, Daniel's been doing this for the last couple of years, so he sees what he wants. He's focused. Follow one course until successful, and that's what he did. He stayed in the multifamily lane. He didn't hear everyone else saying there's no deals out there, because it's difficult right now. And if you succumb to what everyone else is saying, deals aren't going to fall into your lap. It's the long game, and if it's not going to happen now, it'll happen in 6 months with Daniel, because he's out there putting stuff out. I mean, do you agree with that?
Yeah, absolutely. You just, broadcast to the world what it is you're doing, and people that you normally wouldn't come in contact with just day to day, can come across your content and become aware of you. So, putting out that content on social media, I didn't expect to see any kind of payoff for at least a year or two, whether it be from investors or from deals coming in or just other people who want to connect. So the investment of time into putting the content out paid off way quicker than I thought it would. So
Daniel, walk me through, how did you sell the broker on you? How did you tell the broker, I'm the person who's going to take this deal down?
Well, I think I was almost pre-sold due to all the content I was putting out. He had a good sense of what I've already done. And as you guys know, you've been putting out a podcast for years. By the time students come to you and individuals, they already kind of feel like they know you. So he had already consumed a lot of my content and known what I was doing. And then it just came down to whether or not I was going to be actually a closer and someone who could actually take the deal down, get the capital, make it happen. So I think when it comes to convincing brokers that you're worth doing business with, you might just be providing them a screenshot of funds that you have, or maybe some soft commitments from investors. You basically just want to convince brokers that you actually can close and you're going to get it done. So there's a lot of tire kickers, out there. I think that's usually what turns people off, or turns brokers off to newer investors, is questioning whether or not they're actually going to pull the trigger and do something.
So one golden nugget that Daniel said, and it's the word I like to use is called inbound marketing. Inbound marketing is basically putting stuff out there, and then you're getting people to respond to you. They're taking a step towards you, and that is huge. And if they see that you're out there, you're active, it's really cool. And the next thing is, everyone out listening to this podcast, go out and create a credibility book. If you don't know how to create one, email me at jakeandgino.com. I'll send you my credibility book, and it'll show you our business plan. If you have something like that and you can share it to a broker, you're way ahead of the game, because the majority of people are not ready. They're not prepared. Does it take 10, 12, 15, 20 hours to create one? Yes, but it'll be done. The broker will know why you're investing in a market. The broker will know your business plan. A lot of our students don't even have the assets in the beginning, but they do have great careers. They do have great bios that you can put in there and share in there, and it's a great story. So I challenge everyone out there, if you don't have a credibility book and you don't know what one is, email me, and I'll send you mine, and you'll be able to create one, and you'll be one step ahead of all the other tire kickers. So Daniel, have you created that credibility book yet?
When I first got rolling, this was a couple of years ago, my credibility book was more so it was a credibility book for my lender, basically. That was the first person I had to sell on getting into the business. Luckily, I had a referral from a family friend who was already in the business. But my credibility book was basically my resume from the corporate world combined with sample deal underwritings that I did.
Excellent.
To basically show the lender, here's my underwriting. Here's how I'm looking at these assets. And these were just, deals that I had come across on LoopNet that were kind of examples of what I was looking for. I didn't have anything under contract at the time when we first met. But I basically showed him my underwriting standards in my resume. And then during our first meeting, asked him what his underwriting standards were. So then when I went out and found future deals, I knew exactly how they'd underwrite it, and I'd be able to know if it would pass the test with them. So
that is great. I love that. So you can create one for the lenders. You can create one for a potential partner. You can create one for a broker. So if you can have different ones, and then ultimately you can create one for investors. And when you start creating and raising capital, you can have what we call a one pager. We have something called the RAND roadmap that's really more robust, but it's just really getting your message out there. So I love that. Create one for investors create one for partners / brokers / and the other one, as you start raising capital, you can create one for investors. So that's a great tip right there.
Yeah.
When you joined the Jake and Gino community, what attracted you to joining the community, and what benefits have you received from it?
The networking. I've become very aware that over the last year, actually more like a year and a half, how important networking is in both my businesses, especially in the multifamily space. So I've really prioritized networking and growing my network. And when I joined the community, I was less concerned with the educational components and more so concerned with connecting with other people in the space. So that was the biggest value add for me, just tapping into a community of people who were on the same page, philosophically aligned, all kind of having probably not the exact same goals, but similar goals, and then being able to leverage all these people who are 5, 10, maybe 15 years ahead of me is extremely valuable.
And the cool thing about it, when Daniel joined, he said he was doing a syndication. I did a weekly lesson for him. So for me, it was exciting because I was able to add value day one, because he's like, I'm going through the syndication. I'm like, great. I'll create a lesson on walking through an entire syndication. And I remember that. I'm like, that's the cool thing about it, because students are at all different parts of the journey, but they all have basic questions. So I remember doing that lesson for you a few weeks ago. Yeah,
no, that was awesome. I mean, the community as a whole is just amazing, whether it's the guys leading the thing, you and Jake and Bill, who I'm working with, or just all the other students and people in there. Everyone's a rock star, and everyone is so excited to help each other out. It was really overwhelming. So,
which is a weird thing, right? Isn't that a weird thing in this type of I guess where we're in this type of time we're living in? But what I tell everybody is multifamily is a team sport, because it's just scaling. You're going to need potential partners, potential investors. You're going to need other team members, whether it's other attorneys, CPAs, and if you can have other people helping you out and joining you, I mean, that's just great. That's what we're looking for. That's what we're trying to build.
Yeah, it's amazing how there really isn't a scarcity mindset, at least not in the Jake and Gino community. And from what I've seen in the multifamily industry as a whole, there isn't a lot of scarcity mindset. In the fitness industry, there was almost some competition between people who were kind of doing the same things. But in multifamily, people who you might perceive as being competitors it just doesn't exist. There's no competition. Everyone just wants to help each other out, even if they're doing the same thing and theoretically might be competing for the same deals. You don't get that attitude. So
it's funny with the nutrition space you say that. I used to have a doctor who was a chiropractor, and I always said to him, why don't you get a massage therapist in here and share space and try to network? And he's like, well, if I do that, my patients will come and see me less. And I'm thinking, well, what about the patients that they have?
Yeah.
They work together. That's
exactly
mindset. That's what you don't want. You want the abundance mindset. So that was amazing to me, wasn't it? That was an amazing revelation that I had a few years ago.
Yeah. It's been a really pleasant surprise in the multifamily space, how much everyone just wants to help each other out. It's been amazing. So,
and I love that. So I challenge everyone out there to read the book from Garrett Gunderson, Killing Sacred Cows. It's an amazing book about abundance and scarcity mindset. It'll shatter a lot of your beliefs on what's going on in the financial industry. It talks about the 4 I's, insurance, and goes through all that, but really talks about your sole purpose too. And really, See if you have an abundance or scarcity mindset. I had a scarcity mindset 5, 6, 7 years ago because it was just all about me. I wasn't thinking of creating value. I wasn't thinking of growing the pie. I always saw the pie as 8 slices, the pizza pie, right?
Yeah.
Slices. There's not really 8 slices. You can cut those slices and make that pie bigger. It's not a zero-sum game in multifamily real estate because you're buying a property from a mom and pop right now. That mom and pop is making money off of that transaction. They're doing probably really well because they bought it at 99.
Yeah.
You're going to make money from it. Your investors that are investing with you are going to make money from it. If you have a property management company, they're going to make money from it. The real estate broker makes money from it. The lender makes money from it. So it's an amazing concept to think of it. There's a lot of people eat one deal and start putting, 30 units, 300 units. You can see how this thing starts scaling, how exciting it is.
Yeah, no, I love it. I've been hooked ever since I got that first deal.
That's
Speaking
awesome.
of the 32 unit, let's dive into a little bit of the opportunity. I know you said the numbers looked unreal. It was so good you thought the email was fake, but let's dive into what you liked about it, the repositioning plan, all of that.
Yeah, well, the first thing is, it's 75 a door. And in this area, these types of assets, if you were going to go and list it on LoopNet or something, it would be 90 to 100 a door right off the bat. So the price point was very attractive right off the bat. And then when we got the rent roll, the average rents for 1 bedrooms were, I think, $734, and the average rent for 2 bedrooms were about $848, I think. And in the same area, I'm getting $1,200 for my 2 bedrooms and $850 to $900 for 1 bedrooms.
That is awesome.
So there's a huge disparity there between the rents, the current rents, and the potential market rents. And it's just going to be a matter of improving the tenant base. They've let some rougher tenants stay there for a while now, so we've got to go through that process of figuring out who the less than ideal ones are that are causing some riffraff and expediting that. And then the rehab work is there's some units that are going to need a decent amount of work, but on average we're looking at probably spending about $5 to $6 per unit to fix up the units, and we'll be able to get those rent premiums pretty quickly, which is exciting.
And Daniel, one other question: the property manager, you're going to be managing the property yourself?
Yep. Yeah. So I'm building a vertically integrated company. I've got a full-time manager on staff. There is a caretaker on site right now who we're definitely going to keep on board at a discounted rent for at least a few months because that's going to be a big value add. He already knows the ins and outs of everybody there. He knows all the dirt on everybody. So we're going to keep him as our on-site guy for just general little one-off requests and tenant communications. And then my full-time management team is going to be in there implementing the business plan and making sure things run well.
So as the mom and pop owners, are they managing it themselves right now?
Yes.
And how are their expenses? Are their expenses higher than normal, or?
Yes, there's a decent amount of plumbing issues that have popped up over the past 12 months. So if we're looking at their historical P&Ls, their water expense was through the roof. And then otherwise, they've been deferring quite a bit of maintenance. They did just get a brand new roof, which was nice. That's a big CapEx item right off the bat that we don't have to worry about. But otherwise, they were just running it very inefficiently. There was a lot of leaks and things that went undiagnosed. So yeah, there's a lot of room to clean up there and create some value.
So it's great. This is what Jake and I refer to as the death spiral. This is the death spiral landlord, and there are a lot of them out there that suppress the rents and say, "Hey, Daniel, your rent is $700 for 1 bedroom. If you go down the street, you could probably get $1,000, but I'll give you charge $700. Don't call me if something breaks." And it's really out there. There's a lot of them out there, and there are a lot of off-market deals. Now, is there a lot of work, heavy lifting on the front end for Daniel? Yes, but that's where the value is created, and he already knows the market. He knows where to go. He knows the CapEx items that he needs to address. And I think the business plan is great at that price point for those people able to get those rents up and manage it yourself. There's a ton of value on there. So it's exciting. This sounds like a really good deal. I mean, right?
Yeah, and it's a great neighborhood too. Right now, it's the building we're getting is kind of it's not a bad looking building from the outside. So I don't really want to call it the ugly duckling on the street, but it's, as far as the neighborhood's concerned, this is the one building that's keeping it from being as good as it could. You've got a lot of single family homes right around it that are families. Everything else is clean and looks nice, and our building is the one that needs to be fixed up. So the neighborhood is already elevated. The building just needs to be brought up to par. So it should be supporting those rents, no problem. And I think every building that I've refied in that same area has come in between 100 to 105 a unit when we've refied them. So there's a decent amount of forced appreciation we can get on this.
That's awesome. Before we get into the short answer questions, what's your best advice for anyone trying to get in the multifamily space?
If they're just trying to get in and just get started, they don't have much experience, I'd say networking and meeting as many people as possible is key. That's really going to accelerate your progress, in my opinion. You could sit around watching podcasts and reading books all day long, but when it comes to actually taking action and getting things done, actually being in the room with people who are making it happen, I think is going to kick your butt into gear a lot quicker than just self-study stuff. So I'd say get out to networking events, meet as many people in the industry as you can, and that's going to be one of the best things you can do to accelerate your progress.
I love that. He's talking about the accountability piece, and that's why you join communities like the Jake and Gino, because when you're on an island all by yourself and it's Wednesday night and you're up in the north and it's 6 degrees out, do you really want to go out and take a look at a property? Do you want to do a property tour? Do you want to call a broker when it's 2 feet of snow outside? No, but if you've got a partner like Jake pushing you, well, you're more likely to do that, right? Am I right, Dan?
Yeah,
you're
absolutely.
not all by yourself. It's tough. So that accountability piece is huge in any aspect of your life.
Yeah. And you'll never know who you're going to meet in an event. One conversation with the right person can completely change the trajectory of your life. So, even if you're like an introvert like me, it's always worth it to force yourself, go out there and meet as many people as you can. And then worst case scenario, there's no real value provided. You just meet a cool person. But, most of the time you go to an event like either a meetup or like the event that you guys had down in Florida, you're going to meet at least 1 or 2 people that are going to really change your mindset or, give you the connection to that broker you were looking for. Or maybe it's just one little golden nugget you pick up that makes it worth putting the time in.
I love that. Let's take a quick break to hear from our sponsors.
Gino, I know a lot of our listeners are wanting to take their multifamily investing business to the next level. I know that you've been hard at work helping Jake and Gino students do just that using our framework. Can you explain to the listeners how they can get our help?
Guys, we've been hard at work growing our community of like-minded investors, and the results of our members has been nothing short of incredible. We're looking to grow this amazing group. What we're looking for is those who want to follow our proprietary framework that we've created. Buy right, manage right, and finance right. Leverage our connections, education, and mentorship as ways to take your business to the next level.
So if you're interested in finding out more about how you can become a part of our amazing community, apply to work with us at jakeandgino.com/apply.
All right, Dan, I got some quick short answer questions for you. What's your favorite book and why?
The book that I recommend when I'm talking to potential investors that are trying to get up to speed on my business model is The ABCs of Real Estate Investing by Ken McElroy. I think that's a really great one-stop shop book for people who want to get a handle on the business model that I do. It's written in a way where you don't have to have a lot of knowledge coming into it. You can pick it up and read it and get a really good understanding of what's going on in the business. And another one that I really like is The One Thing. I think that having extreme focus and knowing what your big value-add activities are is huge. So The One Thing I think is just it's a really short read. It's really quick and small, but it's a really good little way to shift your mindset and make sure that you're focused on the right stuff. So I usually plug it into Audible once every couple months just to kind of get my head in the right space.
I like that. What about your best habit for success?
I would say going back to The One Thing is having extreme focus. And that personality trait can be a little bit tough sometimes. My wife will tell you I am a very, very, very focused person. But when it comes to achieving success in pretty much anything, if you read, Shoe Dog or Grinding It Out, the Ray Kroc book, or the Sam Walton book, Made in America, like all these guys who have done amazing things have been singularly focused on one goal and made consistent efforts towards that goal for years on end. So I think concentrating on one goal, kind of picking your lane, so to speak, and staying in it is huge. So I'd say that's probably one of my best habits is just staying focused on the goal.
That's a great tip. Gino, there's been some definitely golden nuggets in this episode. I want to go over a few, and I know you're going to add a bunch to it. So as for multifamily, it can check off some of the boxes. Control, we're able to control the net operating income versus comp, so we have a little bit less of. And also scale, the ability to pick up 32 units in one transaction versus one by one by one by one, or falling into your lap. What that really means is creating your own luck, taking massive action, and that's when you get lucky. Also, the power of networking. You can meet a partner, team members, investors. A deal can come out of it. Get out there, make it happen. You never know what's going to come out of it. Gino, what were some of your big takeaways from this episode?
Well, I think the first thing is nothing falls into your lap. You got to really work hard like Daniel did. You have to prepare yourself. You need to join a community. You need to read Ken McElroy's book, because that's an amazing book, because I picked it up. I was an idiot and I understood it real easy. I mean, it's basically how to find a deal, how to do due diligence, what a net operating income is. That's the first step. And then from there, let's take a deeper dive in that. The second thing is everyone out there, Daniel's going to have his money for his next deal. He has a $75,000 per door. If he adds $20,000 in value and is able to extract that from a refinance, what he's going to get? He's going to get about $600,000 in equity created. How amazing is that? On one deal. It may take him 18 months to do it, but hey, how many people want to be out there working 18 months and get $600,000 tax-free? Because basically it's a loan to yourself, so you don't pay anything. So think about that for a second. The power of doing a 34-unit deal that fell into your lap with a payoff of potentially $600,000. And we're not talking about cost segregation. He's going to get a cost segregation windfall because he's going to take cost segregation from day one, and he's getting cash flow from day one on this property, and he's getting asset management fees, and he's going to get property management fees. You think Daniel's just hit a home run with this deal? I think so. And I think you can all out there do it if you understand the power of multifamily, and if you look at it like Daniel did. It's a business. It's not just real estate. Daniel's not focusing. He didn't come on here and talk about changing toilets and painting walls. Obviously, he has a team that does that, but that's not where the value is. He saw the value in going out and creating a relationship with a broker, finding a deal off market, putting a deal on the contract, help raising money for that deal, getting the lender. These are all relationships that Daniel has that made him extract a ton of value. And Josh, I need to touch on the books that Daniel talked about. Rick Fox's book is great. Shoe Dog is great. Sam Walton, amazing. They have that are really I guess, similar. The first thing is focus, right? Follow one course until successful. They all had a vision. Jeff Bezos, I guess, they have a vision. You have to change your course. So maybe Daniel can't find deals in his market. Maybe he goes out of the market, right? Maybe he overpays a little bit. Maybe he just waits on the sidelines, but the vision's still there. I think the next thing is all these amazing investors, entrepreneurs, they created systems in their business. You don't do it from day one, but you grow into it. Managing 34 units is a lot different than managing 300 units. Don't stop and be afraid of thinking about the 300 unit mark. Get into the game, commit, then figure it out. Josh hates me for it. I'll send an email. I'm just going to do it. And then we figure it out once I made the mistake, but we all have to commit. Daniel has a strong enough why, and then he'll figure out how to do it. And like I said, they all had the vision. They all took a chance. Everyone thinks you're going to be crazy when you start multifamily. Just like Ray Kroc, just like, Shoe Dog, just like Sam Walton. Are you crazy? You're going to start a business? And I mean, if you think about Jeff Bezos, he started selling books back in 1997. And look what he's created in 20 years. It's an amazing thing that he's done. So if you have the vision, you have the fortitude, you have the education, you have the knowledge, and you have the network, anything's possible if you believe in what you're doing. Gosh, I can keep going, but I think we should, because this is really awesome. Because I mean, Daniel was in nutrition. He never got into the single family home space, so he actually leaped it. He did a lot of due diligence, a lot of education on the front end, and I love the way he's looking at it. He's looking at building a business here. So to me, that's so exciting to have somebody in the Jake and Gino community that sees that. That's vertical integration, that sees the property management. You don't have to go that route. That's one of the routes to go to, and there's going to be a lot of value, and Daniel's going to build an amazing business.
Love that. Dan, how can the listeners get a hold of you?
You can check out my website, dgkacquisitions.com. You can also shoot me an email directly, dan@dgkacquisitions.com. Or you can just follow me on Facebook, LinkedIn, search my name, Dan Krueger, I'll pop up. So I always love connecting with people. So anyone can fire an email over, just say hi, get connected. And if you're local in Minneapolis, St. Paul, can always meet up and grab coffee.
So it's dgkacquisitions.com, correct?
Yep, that is
And
it. Everyone transposes the digits in there sometimes, so a tricky one.
It's Daniel Krueger, Krueger. So make sure you hit him up, ask him any questions, because he's a wealth of knowledge and he's just scratching the surface.
Boom. All right. I want to thank Dan for being an amazing guest on Movers and Shakers and sharing his story. Guys, if you want to be the next guest on Movers and Shakers, email me, josh@jakeandgino.com. And until next time, let's make it a Movers and Shakers week. See ya, everyone.
Thanks, everyone.
Thanks, guys.